Hello and welcome to another update video about the PYTH network. We have seen 5 waves to the upside here into the February highs. We talked about that already in the last video. We have seen a 3-wave pullback into the support region. Talked about that in the previous video, and that was a great setup. The price has now reached the target zone and has now, been consolidating in this target zone for wave 1 of wave 3. Well, for a few days now. Roughly a week. Okay, we've been consolidating here, and the wave 2 pullback could now be unfolding. I don't have a very good read of the microstructure, but I think there is potential that the pullback is currently a wave 2 and that afterwards a third wave could start. If that's the case, the market would respect really well the Fibonacci levels, because we had the dip into the support zone that went according to plan but was still very shallow and very fast. We then rallied into the target area, typically a wave 1 of a larger degree third wave, and would reach the area between the 38.2 and the 61.8 extension. It is possible that it stretches out to the 78.6 extension that's at 129, but if we get a sustained break above 129, I'm not going to watch anymore for a deep wave 2, or deep, you know what I mean? Not in a bullish market, even deep pullbacks are shallow typically. But I'm not going to watch for another wave 2 anymore. I think then we are already in the third of a third wave. So if it just keeps going, okay, we might still be watching for a wave 2 here. But if we keep going and break above $1.29, yeah, I think we're going to go up more directly. There could still be a fourth wave then at some point. That's a phenomenon we have on the ETH chart, that what we've seen on the ETH chart throughout February, a direct move to the upside, and now we are probably in this wave 4, but yeah, without clear subwave structure in the third wave. That's the thing, and a break above the 78.6 extension tells us that this is what we have to expect, well, if it happens. But for now, let's zoom in. For now, we have seen a possible 5-wave move to the upside here. I mean, I like the move. It looks like a 5-wave pattern. Let me put that onto the chart, because it's possible to count this here as a wave 1, a wave 2. This would be a 3, 4, 5. At least visually, we get 5 nice waves, and the third one is the longest one. Obviously, I cannot rule out that there's another 1, 2 hidden here, and that's what I mean, this wave 1 can easily still extend. What I can only share with you at the moment is that, okay, I can reasonably say that we have 5 waves up. This might be a wave 2 pullback now. This is the support region. As long as we're holding above 53.6 cents, I think this chart is bullish. The lower we go, the better from a reward to risk point of view. Yeah, but we might not test the lower areas of the support region. It is now tested, I believe, the 23.6 fib level, which is very shallow for a pullback. Okay, but it could be an ideal target for an A wave. Now, this might have been the B wave, but what are we doing now? Are we now coming down in wave C? It's certainly not impulsive on the way down. But if it now keeps trending lower, then it possibly might reach 72 cents. Maybe even 76.5 only, and then go. Why 76.5? Because what we can do, now that we have some subwave structures identified, this here, if this is the length of the wave A and this is the length of the B wave, then, and that can, by the way, still extend as well. So B waves can still extend. That's possible, okay? So what I really need to see now as a confirmation for the onset of wave C is a break below the last swing low, below the 80-cent mark. But what we can do is we can take the length of wave A, we go to the high of the B wave, and then it's sort of, okay, so round about 77 cents here is the 100% extension level, which is a key target for a C wave. Now, a C wave might also extend a little lower. The 1.618 extension is 69.9 cents. So I would actually say that for the C wave, we're looking at the area between the 100% extension and the 161.8 extension. That would be ideal. That is only based on the assumption that the B wave already topped. If we break above the B wave high, which was here at 91.5 cents, it could be the low is already in, or that the B wave is extending. Either way, to keep it very simple, as long as we're holding above 53.6 cents, the overall assumption that we are here in a bullish structure and the bullish cycle is still valid. All it might do is just to go down lower basically, and extend the wave 2 a little lower. But below 53.6 cents, I cannot justify that anymore. It would be too deep for a wave 2, and something more bearish might be playing out. But overall, if we talk about medium-term targets, then as soon as the wave 2 is bottomed, yeah, I mean, we're looking at, you know, if I've laid it out here in terms of structure, $2.78 as a first ideal target for this third wave, and then for the fifth wave, maybe $3.80. But these are really only the first ideal targets. Further extensions higher, absolutely possible. That's my update about PYTH. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.